Credit score hacks boost your scores fast and unlock financial freedom. Welcome to the Wealth Echelon, your ultimate destination for mastering personal finance, building wealth, and achieving financial freedom. Whether you're a beginner looking to budget smarter, an aspiring investor exploring the stock market, or someone seeking practical strategies for debt reduction, this channel is here to guide you every step of the way. Join us as we break down complex financial concepts into simple, actionable steps. Expect expert tips, proven strategies, and real-world examples to help you take control of your money and unlock your financial potential. Subscribe now and start your journey to financial mastery, one smart decision at a time. Your credit score plays a crucial role in your financial well-being, affecting your ability to secure loans, get better interest rates, and even land a job or rent an apartment. A high credit score opens doors to financial freedom, while a low score can be a major roadblock. The good news is that improving your credit score doesn't have to take years. By implementing smart strategies, you can see rapid improvements and set yourself up for long-term financial success. Here are 10 powerful credit score hacks to boost your score fast and unlock financial opportunities. 1. Check your credit reports regularly. The first step in improving your credit score is knowing where you stand. Obtain free copies of your credit report from the major bureaus, Equifax, Experian, and TransUnion, at least once a year. Some financial institutions and credit card issuers also offer free access to your credit report and score monthly, so take advantage of these tools to stay updated. Review your reports carefully for errors such as incorrect balances, duplicate accounts, or fraudulent activity. These errors can negatively impact your score without your knowledge, so disputing them promptly can lead to quick improvements. If you find any accounts that you don't recognize, report them immediately to prevent identity theft and unauthorized use of your credit profile. Monitoring services can help track changes and alert you to potential fraud. There are both free and paid credit monitoring services that send real-time alerts when there is suspicious activity on your credit report. This proactive approach ensures that you can address issues before they severely damage your credit score. Additionally, familiarize yourself with the factors affecting your score, such as payment history, credit utilization, and the length of your credit history. Understanding how each factor contributes to your score will allow you to make informed decisions that will positively impact your financial standing. Keeping a close eye on your credit reports also helps you track your progress as you implement credit-building strategies. By regularly checking your reports, you can see how your actions, such as making timely payments and reducing debt, directly influence your score. This level of awareness can help you stay motivated and on the right track toward financial stability. Second, dispute inaccuracies. Immediately errors on your credit report can drag down your score without you realizing it. If you find any inaccuracies, dispute them with the credit bureau right away. The Fair Credit Reporting Act requires bureaus to investigate and correct mistakes within 30 days. A successful dispute can quickly increase your credit score. Be sure to keep records of your disputes and follow up if necessary. You can also contact creditors directly to request corrections. Many errors occur due to clerical mistakes, identity theft, or outdated information, so addressing them promptly can make a big difference. Some inaccuracies, such as incorrect late payments or accounts that don't belong to you, can have a severe negative impact if not removed. Consider using online dispute systems for faster processing. 3. Pay bills on time. Every time your payment history makes up 35% of your credit score, making it the most significant factor. Even a single missed payment can cause a drop in your score. Set up automatic payments or reminders to ensure you never miss a due date. Consistently paying bills on time will steadily improve your credit score over time. If you're struggling with bills, contact your lenders to request an extension or payment plan before missing a payment. Some creditors offer hardship programs that can prevent negative reporting. Paying on time not only improves your score, but also helps build trust with lenders, making it easier to secure better terms on loans and credit cards. Reduce credit card balances. Your credit utilization ratio, the amount of credit you're using compared to your credit limit, should be below 30% to maintain a healthy score. Paying down your balances, especially on high-interest cards, can provide a quick boost. If possible, aim for a utilization rate under 10% for the best impact on your credit score. You can also make multiple payments throughout the month to keep your utilization low. Some credit card issuers report mid-cycle updates, meaning that frequent payments can reflect a lower balance even before your due date. Using balance transfer credit cards with 0% interest promotions can also help you consolidate and reduce debt without accumulating additional interest. 5. Ask for a credit limit increase. A simple way to lower your credit utilization ratio is to request a credit limit increase from your card issuer. If your income has increased or you have a good payment history, your lender may grant a higher credit limit, which reduces your overall credit utilization and improves your score. Just be sure not to increase your spending. Some credit card issuers offer automatic limit increases, so check if you qualify. A higher credit limit means you can charge the same amount while keeping your utilization lower, leading to a better score. However, avoid requesting multiple credit limit increases at once, as too many requests could lead to hard inquiries. 6. Become an authorized user. If you have a family member or friend with a long history of responsible credit use, ask them to add you as an authorized user on their credit card. Their positive payment history will reflect on your credit report, potentially giving your score a significant boost. Just ensure they have a solid credit profile before becoming an authorized user. This strategy works best if the primary cardholder maintains a low balance and always pays on time. Becoming an authorized user allows you to benefit from someone else's positive credit history without taking on new debt. However, ensure that the account remains in good standing to avoid any negative impact. 7. Pay off debt. Strategically prioritize paying off debts with the highest interest rates first, while making minimum payments on other accounts. This strategy, known as the debt avalanche method, saves you money on interest and improves your credit utilization faster. Alternatively, the debt snowball method, paying off the smallest balances first, can provide quick wins that keep you motivated. Consider consolidating high-interest debts with a lower-interest loan to make payments more manageable. Refinancing options, such as personal loans or balance transfer credit cards, can help reduce interest expenses while improving your score over time. 8. Use a credit builder loan. Credit builder loans are designed to help those with no credit or bad credit improve their scores. These loans work by holding the borrowed funds in a savings account while you make payments. Once the loan is fully repaid, you receive the money, and your positive payment history is reported to the credit bureaus, improving your score. Many credit unions and online lenders offer credit builder loans, making them accessible to most consumers. These loans serve as a structured way to build a credit history, demonstrating responsibility to lenders. Additionally, they are often available to individuals who may not qualify for traditional credit lines, making them an excellent starting point for those rebuilding their financial reputation. 9. Keep old credit accounts open. The length of your credit history accounts for 15% of your credit score. Closing old credit accounts can shorten your credit history and increase your credit utilization ratio. Even if you no longer use a particular credit card, keep it open to maintain a longer credit history and a better score. If your card has an annual fee and you don't use it, consider asking the issuer to switch you to a no-fee version instead of closing the account. Keeping old accounts active by using them for small purchases and paying off balances regularly will continue to benefit your credit history and boost your score. Additionally, an older credit account shows a track record of financial stability, which can make you more attractive to potential lenders when applying for loans. 10. Diversify your credit mix. Lenders like to see a mix of different types of credit, such as credit cards, installment loans, and retail accounts. Having a variety of credit accounts shows that you can handle different types of debt responsibly. If you only have one type of credit, consider diversifying to improve your score. For example, if you only have credit cards, consider taking out a small personal loan to show you can manage installment debt. A well-balanced credit profile demonstrates reliability and makes you a more attractive borrower to potential lenders. Additionally, different credit types contribute uniquely to your credit report, and demonstrating the ability to manage multiple types of credit responsibly can significantly enhance your overall financial credibility. Improving your credit score doesn't have to take years. By implementing these 14 hacks, you can see a significant boost in your score quickly. Whether you're aiming for a mortgage, a car loan, or better financial opportunities, a higher credit score gives you more power and freedom. Take action today, stay disciplined, and enjoy the benefits of a strong credit profile. Thanks for watching. Stay tuned for more wealth-building insights. Like, subscribe, and hit the bell for updates.